Hi, welcome to the Rooming House Summit. This is the best investment for 2025 and beyond. It's like the perfect storm has been created in Australia with the shortage of accommodation, the rising rental prices, the pressure on new buildings that we don't have enough houses at the moment. So this type of accommodation is ideally suited for that particular marketplace. Now you're going to get fantastic returns, cash flow positive, 10% plus in returns, 3 to 5 years guaranteed rental income on some of these, and there's fantastic capital growth on these. As soon as they're finished, they're worth more money. So make sure that you get a pen and paper, write down any questions, and I'll see you at the summit. Fantastic. Hi, wherever you're from, I want to welcome you to this masterclass on rooming house investments. My name is Peter Sun, and I'm going to be taking you through this masterclass. Now, one of the key things about this investment is that it is one of the best investments you can make in 2025. And we're going to talk about how you can get those 8 to 12% returns plus capital growth with this fully managed investment and a huge tenant demand. So these properties are renting as soon as they're finished. So why should you invest in a rooming house? Well, if you look at a $200,000 to $300,000 investment in a rooming house, it can give you up to $1 million or more profit from the income and capital growth in just 10 years, as well as positive cash flow income for the life of your investment. And if you're investing in your super fund, that money could be tax-free once you turn 60 or 65 years of age. Now, the biggest problems with investing in Australia today is that property prices are rising, the returns are dropping, and it's getting harder and harder to get into the property market without getting into debt and negative cash flow. And this is where a lot of people just can't afford to invest in the types of properties that are going to bring them the returns they need to be able to retire comfortably. So as far as rooming house returns and growth goes, if you put in a 10-year income in and put your money in the bank, and let's say you put $250,000 in the bank, get 5% interest compounding, at the end of 10 years, you'll have $407,000, $222. Not bad, better than nothing. But if you invest $250,000 to buy an $850,000 or $880,000 rooming house, you could make up to $880,000 capital growth plus 10.3% or more returns each year. Now that's based on the Australian property values doubling approximately every 10 years. Now, some of the rooming house ownership benefits are that you pay less tax. You get much larger tax depreciation benefits because of the type of building that it is and the type of construction. You can pay off your non-tax deductible home mortgage much faster using the money generated from these investments. Plus, if you have just 2 rooming houses, they can give you up to $150,000 or more net income in retirement, increasing with inflation. As I said, if you do them with your super fund, that money is going to be tax-free. Even if you just own 1 rooming house inside a self-managed super fund, all income and capital gains will be 100% tax-free when you retire. Now, there's me and my wife actually on a recent, that was on our honeymoon, and it was paid for entirely from my super fund investment in property that's giving me tax-free income every single week. Now, that's one of the properties. I own a property in Early Beach that's giving me 11.59% net return tax-free. I bought the property in 2023 for $845,000. It has been valued at around $980,000 now, and it's giving us a net income of $97,000 per year. So who benefits from a rooming house investments? Well, first of all, if you're an investor that wants a realistic higher return and capital growth from your equity or cash, and you don't want it sitting around doing nothing, then this is a perfect investment for you. If you have cash in super, like I had, looking to get safe, high returns and capital growth, again, these are a fantastic investment. Investors who want to secure their retirement income, pay off your debts and save tax. If this is you, then this is an ideal investment for you. And this is a new type of investment that's only recently actually been brought into the marketplace. And as I said, it is going to be the best investment in 2025 and beyond. So let's talk about what you're going to learn here. Number 1, I'm going to cover the 7 major benefits of a rooming house investments. What is a rooming house and who are the ideal tenants? What are the costs to run a rooming house? And which areas will give you the best returns and capital gains to invest in these properties in? what are the 5 biggest pitfalls to avoid when choosing my rooming house? And that is a big one. So before I give you that, let me give you a bit of information about who am I and why should you listen to me, and share a little bit about my background and property history. Now, my parents are the ones that told me that property is the best investment. They both work in a job their whole lives, but retired multimillionaires because of their real estate decisions. Now, there's a property they bought in Sydney in Kensington. They bought this one for $65,000, sold it for $152,000 5 years later. It's worth over $3.8 million today. Another one here in Bellevue Hill, they bought it for $167,000 and it sold for $1,020,000 just 11 years later. They sold it for. It's worth over $8 million today, that property. They built some apartments on top of it now. Now, my own property investing history is, look, I bought my first property investment probably back in 1984. Yes, that is quite a long time ago, and it's 40 years ago. And I've purchased 24 more properties since then, just of my own, for myself. I also still hold a current Queensland real estate agents and auctioneer license. And some of the properties I've owned is investment units, townhouses, house and land, both in and out of my super. I've invested in NDIS properties, multi-tenancy homes, as well as Airbnbs, and even overseas investments in Bali in USA. I've done some renovations. You can see one of the properties I own there was on the Gold Coast, a high-end property. I've also subdivided some land. So I've had an extensive experience. This was one of my fractional NDIS properties. Now, if you can't afford to buy a whole property, especially inside of your super fund, then this is a great investment. You can buy a fractional investment in one of these properties from as little as $50,000 or $60,000, and this one's getting approximately 13.3% gross and 10.6% net projected returns once it's finished, which is approximately $6,600 from a $62,000 investment. That's a net return to me that this property is going to give. So again, if you don't have the money to buy a whole property, there's some other alternatives that we can discuss with you as well. I've also written a number of books and reports, things like Boom Suburbs, how to find the high growth areas where you can maximize your capital gains, how to sell or rent your home faster and for more money, Beginner's Guide to Investing in NDIS property, and also Beginner's Guide to Investing in Bali, where there's also some good investments to be had. Now, before I get into all the details, I'll just give you a bit of a reality check, do the legal stuff. Look, the information provided by us at Sun Property Institute is for general information and educational purposes only. It is not legal and financial advice. We do encourage you to please seek your independent legal and accounting advice relevant to your personal situation before you invest. And look, all investments carry both potential risk and reward. If you end up making a lot of money and retiring wealthy, it's not my fault. It's because you did something right and you took the action to actually make that happen.
Hi, my name's Nessie Rose and I'm a single wage earner for whom property investing was a bit of a scary experience for me. I've known Peter's son for over 15 years. Peter has lots of experience in property investing for himself, and this really helped me making my first property investment a lot easier. I was really hesitant. I had no experience in property investing myself, but now I've made over $350,000 profit in less than 4 years, and I am so looking forward to buying another one soon.
So having said that, let's get right into it. Let's talk about the 7 major benefits of rooming house investments. The first one, of course, is much higher returns, right? Separate room rents mean yields are at least 2 times and sometimes 3 times the neighboring property of similar size under the roof. So you're basically getting positive cash flow with a lot less risk. Now you're getting multiple rents. So what it means, because you're getting separate room rents, rooming houses provide multiple income streams from the one property. And this is very important. Now you've got, look, 1 bedroom that you're renting, another property there. You've got another one is coming there, 3, 4, and then you've got 5. So you've got basically 5 incomes from the one property, and then you've got a common living area that everybody shares over there. Now, they're a lot easier to rent, right? Affordable rents and housing shortage ensures full occupancy. There's been a lot of articles recently about the rental boom in Australia, prices being unaffordable. Well, these properties are made to meet the demand of what's happening in Australia right now. you've got a lot less risk of no income, because if one tenant vacates, only 20% of your income is lost, with 80% of income continuing to fund your investment and your loan until the room is released. So with a single income dwelling or an NDIS property or anything like that, 100% of income is lost when a tenant vacates or breaks a lease until a new lease is signed. So this is type of property obviously is very advantageous from that point of view. It also gives you excellent capital growth. Look, rooming houses are tightly held property assets due to their higher than usual cash flow. Now, resales are often hundreds of thousands of dollars higher than the purchase price immediately after they're completed and built, giving you instant equity once completed. And number 6, they're easy to finance. Banks love them because they bring guaranteed steady income and have low vacancy rates. However, it is really important to go with a rooming house experienced lender, because they need to be valued as a commercial investment, not a residential one. And this is really important, because if you go to a normal lender and they get a valuation from a normal bank, oftentimes they will not understand this property and understand the income potential of this type of investment. And the 7th is you get very good tax depreciation benefits, because new build rooming houses have much higher depreciation benefits than any other assets, right? And this results then in higher than usual tax benefits, putting more money into your pocket each week. Number 8 is that you can pay off your home mortgage up to 20 years sooner with just one property. And that's a really big one, because the positive cash flow income combined with the tax benefits and capital growth means that you can now be mortgage free in as little as 7 to 10 years. Plus, you're having a high income producing asset for your retirement and or more disposable income for your everyday expenses. So this is a really good investment from both sides of the equation. So let's talk about what is a rooming, or sometimes they call it co-living house, and who are the ideal tenants for that type of property. Now, a rooming or co-living house is a purpose-built property that will often look like any other residential home on the outside, right? So it looks the same on the outside. However, on the inside, they are fully furnished private studios or micro apartments, and each apartment is approximately equal in size. Plus, they have a common kitchen and laundry area all under the one roof, which gives you the multiple tenancies within the one property. Now, the floor plan of a rooming house, this is a single level with 5 studios. Have a look at there. You've got the bedroom, you've got a living room, you've got a kitchenette, a little courtyard, patio, and a bathroom. That's unit number 1. Unit number 2 has got a bedroom, again, living room, a courtyard, kitchenette, and a bathroom. That's unit number 3, bedroom, living room, courtyard, kitchenette, bathroom. Unit number 5 or 4 is again bedroom, living room, courtyard, kitchenette, and bathroom. And this is the last one, again bedroom, bathroom, kitchenette. You've got the living area there, and again the courtyard is there. These ones have a bit bigger courtyard than the ones on the side. And of course, some of these can also have a garage attached to them. So there's literally 5 micro units in the one property, but rather than being built up as in a high rise, they're on the one level, which makes them a lot more economical. And people like this because everybody's got a little courtyard and an outdoor area as well. So let's talk about who are the ideal tenants. So each resident actually signs an individual lease agreement for the furnished bedroom, the bathroom, the kitchenette, and the courtyard area that they actually occupy in that property. Now, usually these are for a minimum of 6 months or up to 12 months agreements, just like any other normal lease. And this also includes their electricity, their water, and their internet. Right? And they can also use those communal areas, including the kitchen and the laundry, which is part of their rental agreement. Now, the ideal tenants that we get in these, so in terms of the residents of these rooming houses, they're often from a really diverse ranges of society profiles, including people such as healthcare and emergency service professionals, essential workers, divorcees, and notably single women aged 50 plus are renting these types of properties, and they're in high demand at the moment. Now, rooming house is the right investment for today because rents have increased sharply in Australia, making many normal rental properties unaffordable for these single tenants, and a rising population and a shortage of houses has created an unmet demand for all types of rentals, And this is where these ones come in to fill in the gap that's been created. Now, they also offer a modern, affordable, and practical solution to the rental crisis across Australia. You can see that in that graph on the right. There's rental crisis going to last for years because of the shortage of homes as far as the population goes and what the shortage of homes is. Now, your property also should be tenanted within weeks of being completed with excellent returns possible. And we can see here that since 1981, the percentage of people, single people who are, living in a household on their own is rising. And this type of property is ideally suited for that type of tenant, and they're in high demand. So let's have a look at what are the costs of running a rooming house. Now, here's a 5-bedroom example of an actual rooming house in Brisbane. So the table on the left shows you all the expenses there, and it'll show you that your net return are approximately 2.2% less than the gross rents after all running expenses on the Brisbane property. So if you invest, let's say, $1,050,000, your gross rent will be around $100,282, which gives you 9.55% yield, which is a very good yield, I'm sure you'll agree. Now, your expenses are $28,000, and your net income will be $77,109, or 7.34% net yield. Now, the expenses include, as you can see there, cleaning, gardening, insurance, management fees, your rates, your utilities, electricity, water, internet, water. So basically all the expenses are listed there. And on top there, you can see the rental, $400 per unit. Now, some of these are now getting up to $500, even $525, $530 a unit within these properties. So the rents can be high, but this is a pretty conservative kind of estimate as to what you can get. Now, we've got other properties of this type. This time, these ones are in Ballarat. Now, in these ones, your investment is around $850,000 to $880,000. Your gross rent is a little bit less, $91,000. However, your rental is actually higher than the ones in Brisbane, 10.3% yield, and it's actually guaranteed for a minimum of 3 years. And your net expenses on this type of property is around $15,636, and your net income again will be around $75,000 for an 8.53% net yield. So these are a better return than the ones in Brisbane, because the cost of land obviously in Ballarat is a lot lower than around Brisbane. So let's have a look at which areas will give you the best return in capital gains, and what is the best area to invest in. Now, I've actually written a book about this, how to find high growth areas for maximum capital growth. And we at the moment, there's you can look at Queensland, we've got Western Australia, we've got Victoria. So we look at different areas across Australia. And for example, here's an area in Ballarat where we've identified a need where there is a new hospital being built, where that circle is that I just showed you, and they need accommodation for their doctors and their nurses. So there you got the hospital, that's that area enlarged, and it is a growing area. There's a lot of infrastructure going in there. So there's some kind of smaller areas that can give you very, very good returns and capital growth, as well as the capital cities. But obviously capital cities, your entry point is a lot higher in terms of your investment, because the land cost is so much higher. So one of the things that we look at to find these kinds of suburbs where there's going to be a lot of capital growth and demand is we look at 14 identifiable and data-driven market movement indicators that can give you signs that property prices could rise in an area. So we look at what's the supply and demand like, population growth versus number of properties available for rent and number of properties being built. How many days on the market our properties are before it sells, to see whether there's demand for properties. Vendor discounts, are the properties being discounted prior to sale? What's the auction clearance rates? What's the rental vacancy rates? And at the moment, some of these areas we have, there's literally below 1% vacancy rate, which is excellent for these types of properties. The proper rental yields, if the rental yields rise above 4.5% for houses and gross yields rise above 6% for regional areas. So obviously, when you're looking at returns like 10.3%, that's going to tell you a little bit about what the capital growth of those properties is going to be in the future. And also how many online searches are there for those types of properties that are being advertised. There's also 7 others. I won't go into them all here, but some of the others are things like infrastructure, what's being planned or under construction, and what are some of the major projects, shopping center, hospitals, universities, and schools. And again, one of those areas that we picked as Ballarat, because there's a lot of infrastructure, hospital being built there, and they need accommodation for the staff. So look, if we look at the two most common reasons people lose money investing in any property, is number one, they invest in the wrong area. Like a lot of the mining towns that were booming, they can have a downturn and there's no demand whatsoever. So there's a town there in Victoria, had 4,000 people, now it's got 20. Obviously, that's not going to be good for your property values. So you got to invest in the right area, which is the research that we do to make sure we have the right areas. The second one is, the only reason you'll get in trouble with a property is that you can't afford to hold it, because over time, look, let's face it, all properties in Australia are going up in value over time if you invest in the right type of property. But if you can't hold it because people lose their jobs, interest rates got a bit too high, they have a medical issue or something like that, well, you don't have that problem, because positive cash flow properties such as a rooming or co-living puts money in your pocket every single week. So they're cash flow positive. You got that buffer. If anything happens, you're still getting money from it every week. If interest rates rise, no problem. You can cover that because you got that higher income and the tax depreciation. So again, they eliminate those two major issues with investing in any property. And look, if you can eliminate those two, property is the best investment. It is the most secure and reliable way to build wealth. And 90% of millionaires in Australia have become through property. It is the best investment to make for your security. Here's a list of some completed rooming house sales, and I will give you this as an example as to what you can expect in terms of when you buy off the plan and what happens when these properties are finished and what sort of capital growth you can get. So I'm just going to pick a couple of those out. There's a property that sold recently in Mango Hill. Now, it sold for $1,285,000. It's a suburb of Brisbane. It's a rooming house with 5 micro apartments within it, and it sold with a 7.89% yield, and it's getting a rent of $101,386. You can see the layouts and the furniture packages there. Now, that property, if you bought it off the plan, and there was 2 of them built on that block of land, right, then they were $1,040,000 sold approximately a year ago, 11 months before it was resold once it was completed. Now, the rent was expected to be $101,000, so the income was expected to be 9.74% yield. That was the off-the-plan price. Once built and tenanted, it sold for 1.285, which gave you $245,000 profit on a 7.88% yield to the investor who bought that property. So even if you don't want to keep these properties, they are a very good property in terms of capital growth if you need to sell it or you want to sell it. Now, here's another one in Bald Hills. Again, sold in 6th of August 24, 7.9% yield. It was rented for a total of $106,000. There you can see the front of it, some of the interior shots. Now, off the plan, this is what the property looked like before. That house was knocked down, obviously. The new one was built. The projected rents were exactly what the property was getting. Now, off the plan sale was $1,080,000 in 2023, so a year before, giving you a 9.88% yield. And once built and tenanted, it sold for that $1,350,000, which was a $270,000 profit for the investor who bought that property. Obviously, there might have been some holding costs and so on, but it's still a really, really good income, for that 12 months or less than 12 months that it took to build the property. So that's a couple of examples. Now, here's one in Ballarat. Now, these ones are for sale at the moment. We don't have a lot of these at the moment available, but they got a 10.77% gross yield. They're between $850,000 to $880,000. Again, 5 bedroom, 5 living room, 5 bathrooms, courtyards, all that sort of thing. And they're really nicely furnished. Now, you can get up to the 10.77% return, but they do come with a 10.3% guaranteed yield for a minimum of 3 years. Right? So you got that 3-year guarantee because they're going to be rented to a medical professionals. The hospitals taking a head lease over these properties. They're going to be subletting them to their doctors and their nurses. So that's how they can give a 3-year rental guarantee. They have private living spaces. They all have 5 separate self-contained units offering a bathroom, bedroom, bathroom, kitchenette, study area, courtyard, and provides comfort and independence to the people that are going to be living there. There you can see the bedroom, the bathroom, right, the living area, the kitchen. Then you've got the common area, kitchen, the living area, and then of course you've got all the other units around there. Now, there's also a dedicated property management team that ensures a hassle-free maintenance on these properties. They come fully furnished as part of our turnkey solution for investors and tenants. And there's no shared tenants responsibility. So all the cleaning, the maintenance, the Wi-Fi, electricity, water, they're all included in the rent and yearly cost projections. Now, they include, each of these rooming houses include 5 micro apartments. As I said, they have their own lounge and dining, right? They have their patio, kitchenette, bedroom with a door, right? So you can have privacy in the bedroom, plus an ensuite bathroom, plus there's that shared laundry, kitchen, and parking is at extra cost if you want a couple of the parking spaces that are available. Now, solar is included with every property, which lowers the cost for the landlord and, obviously cuts your electricity costs for that property. Now, they all come fully furnished with wall-hung TVs, etc. All the lounges, beds, everything is included for your convenience. Now, this one, the Ballarat, once it's built and tenanted, so let's say these properties are based on the same kind of pricing model as the other ones I showed you in Brisbane. So these are at the moment, they're new ones, they've just come on the market. They're selling for between, as I said, $880 to $850 to $880. Once they're completed, you can expect that they'll be worth around $1,149,000 with an 8% yield, which is what all the other ones sold for. So I'm just basing it on the figures that we've got from the other ones. Obviously, things could vary, but that's based on what's been historically sold. So you got up to $295,000 profit once these are built and tenanted, and you got that guaranteed rent. Now, if that's out of your budget, there is other options that are very similar to these co-living and rooming houses. They're called flexi living, and these ones start from as little as $671,000. Now, on these ones, you get around 5.7% return. They're kind of suitable for first home buyers, families, or investors who don't have a lot of funds. Now, it's a flexible layout where you can either have a single family home with an extra income like a granny flat, or a dual income or co-living options where each room is rented individually. And they're a lot lower price point than the rooming houses and NDIS homes, but they offer you a lot of flexibility and really good income. So if you want more information on those, then give us a call. Now, these are also cash flow positive after tax depreciation benefits. Now, here's a little video that actually shows you how these are actually laid out. So you can see there you've got the 1, 2, 3 bedrooms in the main part of the home, and then there is a lockable door and a separate, like a granny flat or a micro apartment with a separate entrance, power, water, internet, right? So that's a separate, and we're just going to blow it up now so you can see the details of it. So you can see that it's got its own bathroom, shower, a home office, lounge room with a TV on the wall there, the bed, right, and built-in ropes, and of course, it's got its own separate entry as well. So they're a good little option. Now, there's 3 ways to invest in these types of properties. You can invest under equity release, so our team of finance brokers can assist you. You can do it as a self-managed super fund, and look, this is fantastic for these properties because once you get, into retirement age, that income, which is going to be high, is going to be completely tax-free. I've got a couple of properties like that, and it's the best thing I've ever invested in through my super fund. And also cash. You don't need any help. If you got cash, you can obviously buy one or borrow, and that's the 3rd way to invest. Now, how long will it take before you can start getting an income? Look, there's 3 ways you can go with these types of properties. The longest is to start from scratch. You basically tell us you want to buy a rooming house, then we go and find the land and we build to order, right? Or we build on your land. Now, that can take between 9 to 15 months. So that obviously is the longest part. But you do get, obviously, cash equity once you build a property because you've created that added value by building the property from scratch. A much faster way is to go for existing land and plans. So that's where the land is already available. The plans are already there. Now, these are rooming projects ready for the investor. Now, some of these will be finished in under 6 months, but normally it's between 6 to 12 months completion time. But we've got some at the moment that'll be less than 6 months expected completion. Now, these are ideal for ideal wage earners who need a lot of tax benefits. So that's option 2. And option 3 is you buy a finished project. So the property is already built, tenanted, and you get instant income. Now, we got some of these properties both in rooming houses and in DIS. However, you pay more for it because you lose on that equity, because now it's already tenanted, you're getting a definite return. So obviously there is a premium to be paid. So you're not getting the capital gain, that you would. And also you might lose some depreciation because it's an existing property. So from the point of view of best investment option for most people, it's number 2, which gives you the greatest flexibility and the greatest depreciation benefits and capital growth at the same time. So here you look at a finished project like the one at Bald Hills, or the one at Ballarat, right? So that one is finished at 1.35 million. You're getting a 7.9% return. That's a finished project. Then you got Ballarat, which is off the plan, 10.77% return, and it's only $854,000. And you're getting basically the same internal. This one's in Ballarat is actually bigger than the one in Bald Hills inside, and you're getting a much higher return. So that's kind of how that works. So let's have a look at the 5 biggest pitfalls people make when choosing a rooming house, before we wrap this up. The biggest mistakes people make is, number 1, they choose the wrong location. Number 2 is they pick properties that don't have an attractive design and appeal to the rental market, even though on paper the returns can look quite promising. There could also be an incompatible or wrong tenant mix. That's really important. Also, properties that are not poorly, they're poorly maintained, so you need to have good cleanliness, good maintenance, and also inexperienced management for the property can cause you problems. So let's talk about poor location. Obviously, there's a lot of properties in the market who are offering very unrealistic returns. Oftentimes, they got like 9 bedrooms in a 300 square meter, home, which means the bedrooms are tiny. They don't have their own lounge rooms. They're too small, and they're not really desirable from a rental point of view. And when the market gets a little bit tougher, then you're not going to be able to rent those out because you're going to get very, very low socioeconomic tenants in them. Right? So I wouldn't recommend that, but location is obviously very important. If they're out in the middle of nowhere, you don't want that. Some of these properties you can see quite a bit cheaper, but they're like way out in the, out of the major centers of population. The solution, of course, is to buy where there is population, build in locations where the demand is high, even at a higher land cost. So in Brisbane, for example, the returns are under 10% now for new rooming houses, but you're getting rents of $400 to $500 per each tenant within those rooming houses, and because they're in those areas of high population. The other one, like the one in the ones in Victoria, Ballarat is the 3rd largest town in Victoria. There is growth and demand due to infrastructure, rising population, putting pressure on housing in the area. So again, you got Melbourne there. There's Ballarat, as you can see. It's not too far from Melbourne as well. And they've also got that. Let me just show you this one. Oh, actually, it's on the bottom part there. You've got that. That's a blow up of the Ballarat area there where the property is. So the second one is badly designed and small rooms. So that's where you have small bedrooms with no courtyards. I've already sort of mentioned that, and separate lounge or kitchen area will not rent as well when the market changes. So here's an example. This is a 6-bedroom property. You can see the bedrooms don't have their own lounge rooms, their own kitchenettes. They're very small, right? They're all kind of cramped. They don't have their own courtyards, right? That down below is an actual ad from a property in Rochdale. And look, they're renting 3 rooms. Look at those rooms. They're just like shoe boxes, right? So in other words, that's not a very pleasant place to rent. You can't really live in your bedroom. You're going to have to be in the common area with people you don't know. People are going to be cooking. There's going to be other people there, strangers you don't know. That's why the ones that work much better are the ones that we've showed you, because our customer surveys and rental prices show that people want and are willing to pay more for these self-contained micro apartments rather than just a room. So you've got it there, as you can see, separate lounge room, kitchenette, bedroom, they're all separated, and you got privacy, you got your own courtyard, and there actually I've been in some of these, and they're very nice, and you could easily, actually be living in one of those yourself. I mean, I thought I could live in one of these if I had to. Obviously, I've got a much bigger property, but if you were in that situation, you'd be happy to live there. Now, This is the 10.77% return winning layout. So tenants who want independent living love this layout rather than sharing bathrooms in a typical 3 to 5 bedroom house. So a lot of normal properties that are being rented out by the room, the bathrooms are share bathrooms because not every room has their own share bath. So as you can see, these ones, you've got the bedroom, you've got the living area, you've got the kitchenette, you've got the bathroom. Again, that's the common area there, the kitchen. And then you've got the second unit, third unit, fourth unit. All these ones have their own courtyards as well, by the way. I just didn't show them there on that particular plan. So the solution is appealing designs, and they can get up to $510 per week. That was an actual ad for a rooming house tenancy there, $510. You can see in the bottom left-hand corner. So it's an attractive design. Co-living and rooming houses, they do demand premium, they do command premium rents, and they will have a high demand from tenants who want to live in these types of properties. Now, the third problem is the wrong tenant mix or too many rooms. Tenants need to be able to get along and have similar backgrounds. You don't want unnecessary conflicts and problems. So too many tenants and bedrooms can lead to noise, overcrowding, and cleaning issues in common areas, as well as all sorts of other problems. So obviously, again, the solution is, like here in Ballarat, you can see that's the area there, that's the town, that's the hospital there and the accommodation. So properties that are built in the right areas to accommodate quality tenants, and like head leases with organizations that need to get staff and they rent these to their staff, like the hospitals in Ballarat, they're a fantastic option because you got quality tenants who are all from the same industry, so they're going to be able to get along and so on. So that's really important. Cleanliness and maintenance, that's another issue with these properties. A lot of these are quite badly maintained. Obviously, they'll attract lower quality tenants. Look, I'm not saying they're going to look like that. Obviously, you're going to have problems. And older properties they can get more messy. So that's why it's important to have regular cleaning and maintenance, which is all included in the rental and the costs of these properties. You got to keep these properties in top condition and in top shape to attract the higher rentals and better quality tenants. I think that's pretty obvious to anybody. And the last one is better and experienced management. Look, rooming houses, they are a specialist area. They require more intensive and hands-on management than normal rentals. So it's important to use property managers that are experienced in this area and they have a hands-on approach. So our solution is that we have good property management and tenant selection. We only use recommended and expert agents in this area who've been renting rooming spaces for over 6 years. Here's an actual example of how easy it is to get tenants. Let me show you exactly how these properties are rented and some examples of what they look like inside. So this is one of the agencies that we use, and these guys are very experienced in renting these types of micro apartments, so co-living or rooming houses. Now they've got their own website where they actually got the properties for lease, but they also listed on realestate.com. So this is just an example that one of those properties looked like this beforehand. This house was renting for about $800 a week, and now it's been transformed into a couple of properties like this one, where there's 5 micro apartments in each one of these, right? And the rent is $2,500 each for each one of these buildings. So it's obviously a lot more, a lot more lucrative from an investor's point of view. And again, look how they are inside. They got separate kitchenettes, they got balconies, you got the bedroom there, you got the kitchenette, you got a separate lounge room, bathrooms, that's the separate lounge rooms they have. Bedrooms, again, separate lounge room. These are all different micro apartments within that building. So that's one example. Now here's another one. This one is in Stanley Road, Camp Hill. Now this one is $510 a week. The other one was $425. So this one's more expensive because it's in a better area. And look, they're getting $510 a week, which is an absolutely incredible, price. And look, all bills are included. So you've got, it's the same company that's advertising it as the one that I showed you before there. And you've got free internet, water, electricity. That's all covered in the rent. So you've got one bill, which people really like, fully equipped kitchenette, separate bedrooms, comfortable living space, 50-inch TV, lounge, sofa, study nook, private ensuite. So this makes it really, really attractive for prospective prospective tenants. I mean, look at those beautiful designs. Right? You'd be happy to live in that, and these will be in demand not only now when there's a real shortage, but even later on when maybe the market is a little bit more balanced. These will still be more in demand than just a single room that you're trying to rent to a person, because people love this kind of design because they can live there on their own, and they got the space and they got a separation and they got privacy. So that's the common area in that particular one. Here's a picture of the bedrooms. So, and close to shopping centers. So these are all well located. So if you've got a well located property like this, it can be a real cash cow. And I'll explain a little bit more on the webinar as we go through these. Okay, so let's just do a summary of the rooming house from an investor point of view. So look, for investors, rooming houses are an attractive proposition due to their high rental yield, often returning $100,000 or more per year depending on number of bedrooms and location. They give you a much higher rental income compared to traditional single-family rentals as they accommodate multiple tenants. The shared living model also leads to lower vacancy rates, as the departure of one tenant doesn't equate to loss of rental income. Now, the investor benefits are that once it's built and tenanted, rooming houses and co-living properties usually give you an immediate capital value increase anywhere from $100,000 to $350,000, right? Plus, you get solid rental income yields, which allows the investor to purchase more investments. You can buy more properties, faster when you got a property like this than when you got a negatively geared property. It's a win-win for investors and tenants. It's really a win-win situation. Tenants enjoy the simplicity and predictability of their living costs, while landlords benefit from the strong returns and growth potential of their investment. So is today the best time to invest in rooming houses? Well, look, no, it's not actually. Strangely enough, it's the second best time, right? The best time was 3 or 4 years ago. Your returns today would be as much as 18% on the prices you were paying then. And there's a little example there of a property on the Gold Coast that I actually know very well. Now the rents have gone up a little bit, but the property price has gone up a lot. So the return on that one dropped by about 40%, from about 2 or 3 years ago. So this is the reason why you got to start investing now. Don't delay. Look, 2025 and beyond is like making to be one of the best investment times literally we've had for a long time, right? The property prices are still rising. There's still a shortage of houses, builders, materials, combined with population growth through migration is going to keep pushing up the prices and the rents, right? There's an expectations that property prices are going to rise by 4 to 6% across Australia, with several areas expecting even higher increases. You can see there the 30-year property price growth. And historically, even over the last 140 years, the property prices have just gone up. That's the middle graph on my screen there. And there's been a steady growth in property prices, and the years of stagnation are quite short. And I don't believe that we're going to get any stagnation in the property market, mainly because of that lack of supply that we have at the moment and the shortage of accommodation. So rooming house is the right investment for today. As I said, rents have increased sharply across Australia. The population shortage has created rising population and shortage of houses has created unmet demand, right? They're offering a very modern, affordable and practical solution to the rental crisis. And your property should be fully tenanted within weeks of being completed with excellent returns, committed. So it is the most secure and reliable way to build wealth, to invest in income producing property, and rooming houses are the best of those income producing properties, along with properties such as NDIS. If you're a little bit more savvy in your investments, they're a little bit harder to get finance for because they're a bit of a specialist investment. There is a real shortage again. As I said, they can give you much higher returns. And as we said, you can invest in cash, self-managed super or equity release in these properties. So we can talk to you about that, whoever sent you to this masterclass. Now, where do you go from here? All right, so the next steps from here is to get your questions answered to determine if a rooming house investment is the best solution for you and your goals. Now, determine your approximate financial capacity to purchase a rooming house investment, either in or out of your super. So we got to get a general idea as to what you can actually afford to buy. Now, once we've done that, we get you to complete an expression of interest and authorize a $500 fully refundable holding deposit Now that is simply so that we can then go and either get your finance approved with a finance broker. We can refer you to, you can go to your own broker. We can also then go to the developers and make sure that these properties are still available, and we're going to have to reserve those properties. So it's just a commitment that you actually do want to go ahead, because if we're talking to the developers, the people that they've got these properties available, we want to make sure that, we're ready to go. We will do the research then, research the market for the most suitable rooming or co-living properties still available for your particular situation and budget. Or we'll come back to you with other options and available properties in your affordable price range, for that type of property. We can also make an appointment with a specialist finance broker to determine if a rooming house investment is feasible from a financial point of view. We can also give you access to specialist rooming house property solicitors, accountants, tax specialists, and assist you in setting up your self-managed super fund. If you need it, you can use that expression of interest deposit also for any of those services. And you get access to our educational webinars, hot suburb reports, and high yield property updates, once you've gone to that stage. And once we decide on a suitable property, there's going to be a sales advice raised with the developer and an additional $2,000 usually deposit paid to secure that property. They can vary that amount depending on the type of property and where it is. They will then generate the relevant purchase contracts in your name and walk you through all the documents and ID you have to submit for whatever names you want the contracts in. Once you're happy and it all makes sense to you, then they issue the contract documents for you to sign electronically or in person. You then transfer the balance of the deposit due to complete your purchase, and the construction will commence ASAP. And you can expect them to be completed anywhere from 7 to 12 months from the date of your investments. But some of those properties, like the ones at Ballarat, they're actually quoting under 6-month construction times for some of those. So they're very quick to get off the ground and finished. So I'm just going to summarize the next steps again. So number 1, get your questions answered. Determine your financial approximate capacity. Fill out the expression of interest with the refundable deposit. We give you some property options based on what you can afford, what your capacity is. We can also set up a specialist finance appointment or a solicitor accountant to set up your self-managed super fund. You can access all of our training tools and areas that are the best to invest in. Decide on exactly which property you're going to invest in, and then pay the $2,500 deposit. The contracts will be issued, and then you can sign them. Once you're happy with that and you've run them past your solicitor, then you would pay the full deposit you own that property, and then construction will commence and the handover will happen once it's finished. So the next step is, look, I'm glad you stayed with me for this long. Contact us, contact whoever sent you to this masterclass, or contact myself on that number on the screen, 0403 468753, or you can just go to our link at the expression of interest link located below this video, and also located on our website at www.sunpropertyinstitute.com.au, and fill out the expression of interest, and then we'll contact you with the next steps. So it's been great having you here. Look, real estate is the best property. As I said, I've bought 25 properties in my lifetime. I've invested in these types of properties, and it is the best investment for today's market in Australia. But these high returns are not going to last forever. So whatever you do, take action today. Imagine if you would have taken action 3 or 4 years ago, where properties were 40 to 50% and even more cheaper. Right, your return would be 50% higher. So instead of getting 10%, you'd be getting 15, 16, 17, 18% returns. Right, so don't hesitate, because as the prices of the properties go up, then obviously the returns are going down, and land is getting more expensive, and so is the building costs. So this is probably the last chance you're having to get these types of returns and this sort of capital growth. So make sure you give us a call, fill out that expression of interest, and let's get you started on securing your future retirement income, paying off your mortgage, saving your tax, and all those things. And let's get started right now. I'll see you later. It's been great having you along on this webinar. And I really hope that one day we're going to be able to meet, and you're going to look back on this training and you're going to think, this was the time when my financial future really changed for the better. This is Peter Sun once again signing off. See you guys later. Bye.
I've been following you for quite a few years, and like most people, I want to be able to retire comfortably and get the best returns on my investments. I'm actually looking to purchase another property but as you know, most properties are really expensive right now. And so I came across NDIS and the fractional investing that offered basically high returns and capital growth. And so sort of served all those main things for me. One was affordable, good returns and good capital growth. And I can see where those properties are located as well. Like you showed me on the map where those different properties were all across Australia. So that allowed me to get involved with the process as well, which I liked. And looking to get my investment back in 6 or 7 years.